What's good, everybody? Deontay Murray here with another video that I want to share with you guys. Today's just going to be a simple, quick video, more of direction to catch longer trades. A lot of us, we try to catch that the odd 50 strategy, or we try to catch the I flat numbers that we usually talk about on the right. Today is just going to be a little bit different, and I want to show you how powerful it can be to catch 50,000 pips. It can be per week if you wanted to just take one good trade per week and be done. So yeah, I want to talk to you about today. The numbers up to the right. Today is going to be 750, 250, 750, 250, 750, 250, 750, and so on. Just those two, 750 and 250, are very powerful when it comes to just trading US30. I can zoom back and show you how powerful they are. Like, speaking for actually today had a big push from 250, went past 750, but we just want to catch it from level to level, which is 50,000 pips per day, or it can be per week, depending on how slow the market is. But we can literally sit and wait for these levels to get hit every single day, or throughout the week. We can wait for these levels to get hit. And we know that something big is going to happen around these 750s and 250 areas. So, for instance, for myself, this market, not saying, and I'm also, don't get me confused, I'm not saying to just jump in a market at 250 or 750. I would go to a smaller time frame, because you see how I pushed above it and wicked, then it fell on the next candlestick. I will wait and see on smaller time frames, a smaller moving average. I think I used the 9. I'll wait for the 9 to get broken on M1. I'll show you an example here in a minute, but just letting you know that I just don't enter at these levels. It's a sense of direction. Let's look. What I mean is this: last week, so from on MT4 on H4, from this black line to this black line is a week worth of candlesticks. We had a big bullish push from all the way down here all the way to up here, closed up here somewhere. I know that we have to get back and retest some of these areas up in here. So when the market is pushing all the way back up to here to the 750, I know that this is an area of where I would like to take a big sell from, so that we can get back into these areas to retest. You can pull out a fib as well, from wick to the highest wick, which is right here where it closed. Now we have hit the 750 before we can actually get back down here to retest 61.8, 50, or the 38, right? Those are the main key Fibonacci areas that we most likely have to retest. So once we get back up here to 750, go to smaller time frames, I would like to take this trade from here to the next level. Honestly, be looking to get out when it hit 50,000 pips. That's a lot of pips for myself. Or you could have hold it possibly to the next level, going to the 50 on the Fibonacci. So just above it is the 750. So you could have had 100,000 pips made. Just a quick video. I just want to show you this quick video how powerful these 750s and 250s are. Not saying that you should trade exactly at those areas, but you can see how, we retest. Basically, this looked like a Fibonacci. This looked like a fib retracement itself. From there to there, came back to the 38. So once it came back to the, or was it the 61? Came back to the 61. So once the 61 was hit, I know I can start looking to take this trade from the 250 going to the next 750 area, right? Don't want to confuse you guys, but I do want to show you. Let me go to M. Let's go back to H4 so I can show you how powerful it is. So I'm still on H4. Look at this. Look at this. Market came all the way up to 750. Looking to take a sell back to where next level 50,000 pips is made. Get out the market. You can look the week before. Week before came all the way back up to 750 again. Look to take the sell, could possibly hold for 100,000 pips. But we looking to just catch 50,000 pips. It's another good trade. What did the market do at the bottom? came to 250, take a buy, right? Let's look at the week after. We broke above 250. What do we do? Came back and retest 250, take the buy, boom, 50,000 pips. See what I'm saying? You can do this all day long, but it just helps with just overall direction. Because if we pushed like this week, it pushed all the way up here, closed. So I know, okay, we have to get back inside. Like I said, you can pull out the fib. We have to get back inside this Fibonacci level, right? So from here to there is what happened this week. We looking to catch the trade this week. So overall, I know that we have to push up under this 250, right? So when it started to break up under this 250, came back and retested in this area right here, take the sell, next level to level, boom, about 47,000. And that's another thing. By the time I get to 45,000, I'm looking to kind of look to get out. You might not have to hold it for 50,000 pips every time. This is just the overall direction and understanding that we have to retest back to level, back inside the Fibonacci on H4. So now we have these big levels, which is 250 and 750. So once we break up under it, look to take the sell back to the next level. So by the time I get to 45,000 pips, that's enough for me. I'm done. This one looked like it consolidated a little bit, pushed all the way back up to 250 again, was hanging around it. Could have looked to take another sell. Boom, caught it again. 50,000 pips made. There will be times when it goes past it right here. So say, for instance, if you're on the wrong side of the market trying to take this buy, you would have tried to take the buy. That's why I say it's not an area of where to take the trade. It's just a sense of direction, right? We know we have to get back inside that fib from down here to up here. We have to get back inside, that fib level. So the main trade that I'll be looking to take this week would have been from this 250 all the way down to the 750, right? Since we consolidated hard this week, I would have been like, okay, we might be looking to break the 66 moving average. So, once it's shot back up here to 250 area, looking to take a sell from here to there, boom, another one, or possibly hold this one because we're looking at, retest that same fib that was down here. I think we only got to the 23, which is not a good fib retracement. So yeah, we got to the 38, but couldn't break through the zero. You see how many times we try to get back to this 250, which is the zero area from this fib 2 weeks ago. Couldn't break through, came back, retested again. Now I would have took it, right? This is all just resistance. Take the sell. Now I can possibly hold it to the 50 for 100,000 pips, right? Just using that same fib on H4. I don't want to confuse you guys because I have a lot of knowledge when it comes to the market, so I see it, my eyes see it, but I want you guys to just go back and try it yourself. Like plotting these numbers and just taking it from level to level will allow you to catch more trades when it comes to just using using these 750 and 250s. So like another trade would have been from here to there, boom. The moving average that I have on my chart is 13 open, and then this red is the same 66 close, simple close, and 66 is just the overall direction. If we're up under, we're looking to take a sell. This 13 moving average usually, it'll pull back to the 13 to like a fib and pushes off of it. You see some rejection off the 11. Look at all these rejections. I mean, not the 11, but the 13. You see this rejection off the 13s. Could have been looking to take this trade. Since we're getting these rejections off this 13, could have been looking to take this trade from there to here, 50,000 pips. Just keep going back and just show you how powerful it is. So instead of looking to take trades every day, you can be looking to take that one good trade throughout the week. So like if we're just floating in the inside of it, you're not ready to take a trade until it gets to the level. Once we get to the level, go to smaller time frames. Boom. Like I said, M1. Here's another perfect example. Let me show you how I will basically look to try to get in this trade. So I'm only trading at these levels. So once we actually came inside this level right here, boom, we touched it. 250 was touched. And that's another thing, that it doesn't have to actually touch the 250 or 750. Sometimes why you think I have that rectangle box around these 250s and 750 areas is because it's an area. So once this area is touched, and this is the 9 moving average, right? So 9 sample and it's open. So once it's broken, right? So it got broken on this candlestick right here. Boom. I want to see some type of pullback back to this 9. So yes, to just continue, I would want to take a trade somewhere around this area back to this 9. So my entry would have been somewhere inside of here. Boom. And using the same risk to reward we talked about last time, taking a sell, stop loss go 6,000 pips. Boom. Reward can go where next level because we were expecting it to go from level to level, right? And I'm not going to just put it on 750. I'm put it on the zone. So that's 40,000 pips we caught easily just waiting on it to get to this level and showing some rejection, breaking up under a non-moving average on M1, and then taking a sell once it came back to retest. Some more trades that you possibly could have took. More people would have been like, okay, why you didn't take the buy here? Why? What's a good reason that I wouldn't take this buy? It's because we're floating under this 66 moving average, right? This is the 66 moving average. It's the same as H4. 66 moving average. Why would I want to be going against this trend? It's already flowing down. We already been seeing downtrend structure. Yes, you could have possibly been looking to try to take a reversal, but I don't want to take that reversal, right? We've been flowing down. I think it's going to continue down. I would just leave it alone, especially if they're catching this big trade. Once this big trade, this level to level is already touched from there to there, I'm done. I don't want to. I don't got a good feeling that it's gonna, push all the way back up to that level, right? So I'm leaving it alone. We can see some more. So I'm just showing you guys how I would view it. So we didn't touch none of the areas. We came close, didn't touch. We touched the 250 area right here. And once it touched, what do I look for? Look for a breakup under this 9 moving average. We got it broke up under the 9 moving average on this candlestick right here. Now I want to see a pull back to the 9. So it really didn't pull back to the 9 until we got like to here in this area. Boom. Now I'm taking a sell, using that same risk to reward that we spoke about last time, putting a stop loss for 6,000 pips. TP goes where? Next level. Or like I said, you don't have to try to catch it the whole 50 to 40,000 pips. You can just put it at 40,000 pips or 45,000. Or even, for instance, you can put it at 30,000 and be done. All I'm showing you guys is how to catch longer trades versus holding trades. Like this one would have been probably a losing trade if you had been holding it for too long. It came all the way back up. TP would have got smacked, as you see. TP would have got smacked right there. But you could have caught all of these pips more than 20,000 pips. Could have caught it for 30. By the time or like I said, 25,000 pips would have been great as well. All I'm showing you guys is that trading at these levels can sometimes help. It's where big moves are happening. You have sometimes you have great days where push for a lot of levels. Say for instance, like this was a lot of news back and forth, so I would have been leaving that alone. But like something like this, we haven't got to any levels throughout the day. When New York came around, boom, 6:30, that 9 o'clock opening, we haven't really pushed from level to level. So I would have been already looking to take this sell all the way back down to this level, right? Boom, 50,000 pips caught. We can try to zoom in and see if you can get a good entry. So about 6:30 is that opening when they start Let me see. A good entry would have been something like this. So about, like I said, I like to trade at 1500 anyway. So for myself, I probably would have been trying to get in since we haven't hit no levels. I would have been like, okay, we're going to go to 750. So my entry probably would have been somewhere around the 66 moving average, probably here. But even if I didn't catch it there, a good area would have been just a pull back to this 9. Anywhere with a pull back to the 9 is where I'm looking to take this trade, right? You don't want to take a sell while you're above the 9. So just wait for it to stay below and then pull back to the 9. Stop loss goes 6,000 pip. Yep, 6,000 pips. Let me pull it up or something. Try to make it as accurate as possible. 6,000. TP goes next level. So this one, it actually went all the way. So this would have been a fantastic trade for 55,000 pips about. Like I said, sometimes when I get to like 45, 45, 47, I'm looking to already get out because I don't want a reversal to happen on me. So all I'm doing is just showing you guys that how powerful these levels are. You can go to H1 as well. Looks even better, clears up some of the noise. Let me see if I can get my screen in. So every day, just about every single day, just about every trading day, these levels are getting hit. Could have took a sell from here, and what it does as well will help you. It will save you from taking bad trades as well. So, or taking too many trades like this day. All this consolidation, we wasn't even near a trade. I mean, we wasn't near a level. So I probably wouldn't have took the trades, right? Like this one, consolidate all throughout the day. Now I know I don't want to take this trade. Now we pushing down. And when the opening of London, I mean not the opening of New York happened. What did it do at 8 o'clock? 8 o'clock, which says 15 at the bottom. Push back to 750. Take a sell. We already floating down. Take a sell. Boom. That's a lot of pips. 25,000 pips. 28,000 pips. All I'm saying is these levels are key areas of where big moves are happening. It might not always work, but once you get in this area, you can start to take big trades, catching 30,000+ pips, right? And another thing is that when you are looking at these 750 areas, it doesn't have to be the opening of London, right? Or the opening of, New York, my fault. So like for the previous strategy, we looked to take trades only during the time of New York. With this strategy, it doesn't matter. So like when Asian is in this area and it's around my area 250 area, I know that I can possibly start looking to take this trade, right? Getting in it early. Another time, Asian came close. Asian was down there and take the buy. You don't, for this strategy, you don't really have to wait to trade during New York. You can, don't get me wrong, New York is going to be more volatility, is going to actually go to the levels or either pull from the levels. So like when this 8 o'clock came back and touched this 750, sell. We're up under the 66 moving average as well. So we're still in this downtrend. That's a good trade. Get out. All I want you guys to do is go back and plot them and see how powerful these areas are. New York came around. This is 7 o'clock, 8 o'clock. Where are we at? Up under the 250. Take a sell, boom. Stop loss goes 6,000 pips. I'm not going to plot it, but you see it never got touched. Next level, 50,000 pips was made. So yeah, just look how powerful it is. Came up, look, take some rejection, sell, boom, led into the next day. TP was smacked. So yeah, I'm gonna cut the video off. Just basically go back and test it. Another thing before I cut the video off is that you can try to place the Fibonacci from level to level. So you can put 250 and 250 and 750, and sometimes tell yourself, 50 to 61, uh 50 to 61.8 is a key area. If I know this is going to continue in a downtrend, now I know I can possibly look to take the sell from here to there for 30,000 pips as well. So yeah, go back and retest it. I want you guys to see how powerful it is. For a lot of you guys who do work, it can probably save you time when it comes to just trading overall. Don't trade until you get to some of these levels. And then when you actually get to some of these levels, you can catch bigger trades. So take it from there to there for 50,000 pips and be done for the week if you wanted to. The goal for us is to put, a standard lot or put a one lot on here on US30 and then catch that $50,000 and be done for the whole week, or put two standard lots on there and put $100,000 on there and be done for the whole week. So yeah, I'm gonna leave you guys alone. Back testing until you perfect it, and then when you perfect it, go live or even try it on trade funded accounts if you want. So I'm out. I didn't want to make this video long. If you do have any questions about anything, I do post my Telegram below, Instagram as well. So you guys can hit me up on Telegram at CEO Murr, Murr. Yeah, talk to me if you have any questions, anything that you want to, work on. I do offer service as far as like $250 to be able to get on a call and be able to add you to the group meets as well. So yeah, just hit me up, man. We could talk more about it in the chats. And have a blessed day. I'm out.